remember, the silver market represents 0.02% of the entire financial markets. So, which is astounding to me if you think back to like 1900, which is, I know, 120 years ago, and I'm not that old. I'm old, not as old as the dinosaurs, but nonetheless, 1900 isn't all that long ago. And everyone, money was silver. It was silver in your pocket. So everyone basically, more or less, was on the silver standard. And now 120 years later, and that would represent basically the money supply, the base money supply, the real money supply, the in your pocket money supply. Now it's 0.02% because it's not money anymore in most people's minds, in the cognitive map and the way you think. So I think that as more people become aware of it, and that goes to 0.04% or 0.2%, a tenfold increase, you will see a move into silver like you've never seen before, because it's a global phenomenon now. And there will be everybody on the planet, more or less, that will be seeking some type of asset class other than food, which will be number one, that they'll be flocking to preserve any purchasing power. And this is a race against the CBDCs, the central bank digital currencies, where the nation states will edict that you are now on their system, and that's the only system that's viable for transacting business.
This is Dunnigan Kaiser, founder of Liberty in Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty in Finance. We have a returning guest, David Morgan, the founder of themorganreport.com, is with us again this Monday, January 4th, 2021. David, thank you for joining us again here on Liberty in Finance.
Dunnigan, it's always good to be on Liberty in Finance. Thank you.
I have a list of questions that have been freshly submitted by our viewers ahead of your arrival here, but I thought I would give you a chance, first off, if you have any thing that's just burning on the top of your mind. It's been several weeks since we talked. We've gone through the end of the year. We've gone through the December delivery month on the COMEX. We've kicked off a new calendar year. If there's anything in that arena that's just top of mind for you, please feel free at this time, and then I'll follow up with some viewer questions.
Well, thank you for that forum. I just got done with the interview from Stansberry Research about, my big picture look for this year. And there's actually 3 areas that are very concerning to me. Number one is food and the tightening of food supplies. We are in a soybean shortage right now. We're having all kinds of dislocations in the meat industry for various reasons. And we're seeing long lines for food banks. In fact, I think the number one provider is called Feed America. I may have that wrong. And they just put out an update that they will be short about $1.4 billion basis the current demand for people that need food. Doesn't mean they're not going to get fed. Doesn't mean it's not going to happen. It just means that the abundance that they had stored on the shelves is rapidly being depleted. And it doesn't look like this food crisis is going away anytime soon. So expect higher food prices. Number 2 is cybersecurity. This idea that, we're secure with our phone, with our software and our protected software that we have installed. That may be somewhat true on a personal computer basis, but the SolarWinds hack is instrumental in providing a very, very detrimental potential to the infrastructure of the internet at large in the most key factors in our society, meaning the NSA, the White House, many of the government federal agencies, and 400 of the 500 S&P companies. Now, not all of those were breached, but all of those had a connection with SolarWinds or one of the security providers that were breached, providing a backdoor into these systems. So as it stands right now, no one knows exactly how many have been breached, but it doesn't take many to potentially cause a great deal of strife in pick your industry: banking, transportation, communications, power, grocery supply, just you name it. So is this going to happen? We don't know. Is it going to be just basically a reconnaissance effort where they're spying on, what the Treasury Department's doing and what the Department of Defense wants to do, and on and on? I don't know. I suspect it's not just that. I suspect they may lay low for some time, and it probably wouldn't be something all at once. It'd probably be a test case here and there to see what the reactions are. Can it be routed out? And the answer is yes, but extremely difficult to do so. It's like having a large warehouse where you have an infestation of wasps. You might get 90% of them and think it's done. And then that 10% that you didn't see restart and can cause havoc. So, not trying to paint gloom, it's what's on my mind. The third one is basically the crypto space. I think I should really say the alternative currency space, which I'm sure we'll get a lot of questions on. And that is what are gold and silver and crypto is going to do this year. I think they're all favorable for different reasons. And I think there's going to be more and more of a pour or flood into these asset classes that are outside of the mainstream banking system.
Yeah, those dollar alternatives, we're certainly seeing a bid over the weekend here and heading into today for the precious metals and cryptos. And there's been a lot of noise over the past month from both alternative sources as well as official sources, major banks, major investment brokerages, major banking firms saying, Bitcoin is the new gold or that sort of thing. Could you just at least touch on that before we move on, as far as what you think the complementary or competitive roles that, or I guess paradigm shift roles that you think cryptos are going to play versus precious metals going forward?
Well, they're two different things. And, I find it rather humorous from my perspective that, Bitcoin is always tied to gold 2.0 or digital gold or whatever. I mean, it's really not. I mean, if you want something distributed that's anonymous, there's nothing more than the basic. And that's something that's done it for 5,000 years. And that's, a gold coin or a silver coin that is totally anonymous. I mean, go back to GATA. And of course, I'm well aware of this having an aviation background. But, the survival box that you have when you ditch an airplane has a gold coin in it. It doesn't have a Federal Reserve note. Doesn't have a yuan, it has gold. And that's because it's universally accepted and usually universally recognized. As far as the digital currencies are concerned, they are obviously on the move. I think they're here to stay. There will be some ebb and flow in them, and there'll be some winners and losers. I think it's pretty apparent which ones are the winners, at least at this point in time. Will continue to raise. But I look at the crypto side as being an adjunct to a gold and silver holding. Yes, they can coexist. I mean, I'm not smart enough to say, one's better than the other. I have an opinion, but the market knows more than me. And the market has certainly shouted very loudly that Bitcoin is something that is highly speculative and can make some rather dramatic moves. I think it was just a few months ago, Bitcoin was around 10,000. And now the last time I checked, it was well over 30,000. So, that's the kind of move that you don't see very often in any type of financial asset.
We have questions zeroing in on the state of actual fundamentals. You were talking about the physical things. Craig Curtis says, does anyone know how much silver is above ground? How does that compare to gold above ground?
Yeah, we do in a way. I mean, I'm going to try to make this succinct. So if you go back, I can verify this. I'm not picking it out of my head. I'm not making it up. I'm not just saying it. You can go to CPM Group, which is one of the best silver studies in the world. They also study gold, platinum group metals, moly, copper, you name it. They do in-depth studies of all the metals. And you will find that from time immemorial till now, you have got silver's mining activity is roughly 60 billion ounces. and gold's above ground. Mining, I'm saying mining, I'm making 60 billion a mining number. Gold is 6 billion. So the ratio of 10 to 1 roughly holds, okay? The natural ratio, what's in the ground. Now, in gold, almost all of that 6 billion is above ground in either coin, bar, or jewelry form. In silver, at least half of it's gone. So from a practical perspective, it doesn't exist. Yes, it's back in a landfill or it's distributed somewhere that's uneconomic to retrieve it in almost all cases. So what I like to do, and this may be cheating, I'll just tell you what I think and you can think about it on your own, is how much investment gold is there and how much investment silver. So we take away the art form of silver, we take away the silverware of silver, and we look at what I call investment silver, which would be silver coins, silver rounds, silver bars of 1 ounce, 10 ounce, 100 ounce, and 1,000 ounce commercial bars. And we look at that number. We don't know what that number is, but it's estimated to be somewhere around 3 billion ounces. So if you do that same form of gold, which you would take out jewelry, for example, and yes, there's some gold, quote unquote, silverware. It's really rare, not worth talking about. But nonetheless, you take out the art form and the jewelry form of gold, you're probably looking at maybe 2 billion ounces. This is a wild ass guess, but that's pretty close. So you've got more silver in investment form than you do gold. That's probably true. So what is the answer? Well, I just gave it to you. If you want to say that every atom of silver that exists is 60 billion ounces, be my guest. But from a practical standpoint, you've probably only got 3, maybe 4 billion ounces of silver in investable form that someone would want. Now, in a big silver run-up, you would see some jewelry come into, coin form or melted or traded or discounted to smelter or whatever. And same thing with silverware. But I don't think it would be quite the meltdown that we saw in 1980. Silver was $50 back then, and the fiat equivalent to that somewhere around $600 now. So I'm not saying that people would wait to $600 to sell their silverware, especially under tough economic times. They might wait for it to get to 50, nominal numbers. So that's good enough. I'm getting rid of silver, but I still don't see it stopping the market this time.
So a related question also from Craig Curtis is, what are your thoughts on a supply crunch that would make silver more rare than gold for industry? In other words, if it gets consumed so much more in the new industries.
Yeah, I've talked about this in the past. I'll do it again. So again, back 20 years, silver's industrial use was 35% of the market, and that's when we mined 550 million ounces. Today, we mine about 850 million ounces, and it's up to 60% of the supply. So if that trend were to continue, and by the way, silver mining has basically leveled off, going slightly down, slightly 1% type of thing the last 3 or 4 years. So we're static on the mine supply right now, only for a few years. So we can't project that out for the next 10. We don't know. You could do that, but we don't know if that's accurate or not. Nonetheless, if you did a least squares linear regression and did a curve fit on what that looks like, you would determine that there'd be a crossover point to that static line of 850 million ounces mined and 150 million ounces recycled for 1 billion ounces per year produced in silver commercial bar form, or silver period, what's called silver, versus 60% of that market, which is 600 million, going to 700 million, going to 800 million. So where does that cross over? You can do the math. I won't do it for you. But in theory, it could happen. But you got to remember that like solar panels use about 1/3 of what they used 20 years ago for the same efficiency. So the market squeezes out because it's economics. You want to get the most miles per gallon out of a gallon of fuel. You want to get the most nautical miles per pound of fuel in the aircraft industry. You want to get, the highest yield per crop or whatever. So efficiencies come in, which will curtail maybe a given industry like solar, but that doesn't mean that the solar industry won't double this year because of mandates throughout the world, or people moving rural and want their own power, or people that want off grid or whatever. I'm just saying that the efficiencies of the solar panels have improved. So it's a great question. No one has an exact answer, but the trend is it's possible. Probable? No. Possible? Yes.
You really mentioned how the economics shift as the price moves dramatically, and that can open up new channels of supply that were previously not economically feasible. Ivan Geta says, how many silver mines are going to be going offline in the near future versus how many are going to be started up? Will global production stay flat for the next 5 years?
Great question. I wish I knew the answer. I really don't, but I'll give you a guess. First of all, to put a big mine in production usually takes years. 5 is a minimum in most cases. So I'm aware of 2 silver mines, or potential mines, I should say, that are in the Morgan report that are very substantial in the billion ounce categories. But that would only supply about a year's worth of silver. As I said, we mine about 850 million ounces. Now, if that mine comes to fruition, you're not going to mine the whole thing out in 1 year. It's going to mine over 20 years, but it will add to the supply. So I'm not sure. I would guess it's pretty close to that. Over the next 5 years, it'll probably remain relatively flat. And the most efficiencies you could get are in recycling. And those that know, I've been pretty hot on a recycling company that I am invested in personally, and most Morgan Report subscribers are well aware of it. Many that just listen to me are also aware of it. I've mentioned it in the public domain several times.
We have a question. You mentioned about the industrial consumption of silver dramatically affecting the availability of above ground investable ounces in the balance there. Chris1234 says, why didn't Tesla or Apple buy billions of ounces of silver to use in their products when it hit the low in March? Should they have? Could they have?
Well, could, yes. Should, no. I can't speak for, intent. I mean, I don't think, other than Chris and a few people, remember the silver market represents 0.02% of the entire financial markets. So, which is astounding to me if you think back to like 1900, which is, I know, 120 years ago, and I'm not that old. I'm old, not as old as the dinosaurs, but nonetheless, 1900 isn't all that long ago. And everyone, money was silver. It was silver in your pocket. So everyone basically, more or less, was on the silver standard. And now 120 years later, and that would represent basically the money supply, the base money supply, the real money supply, the in your pocket money supply. Now it's 0.02% because it's not money anymore in most people's minds, in the cognitive map and the way you think. So I think that as more people become aware of it, and that goes to 0.04% or 0.2%, a tenfold increase, you will see a move into silver like you've never seen before, because it's a global phenomena now. And there will be everybody on the planet, more or less, that will be seeking some type of asset class other than food, which will be number one, that they'll be flocking to preserve any purchasing power. And this is a race against the CBDCs, the central bank digital currencies, where the nation states will edict that you are now on their system, and that's the only system that's viable for transacting business. That's the direction it's going. I can't predict that's exactly what will take place, but it's very clear what the trend is, and that's it.
You've been the one that brought that up to us specifically over a year ago. You've talked about the push towards cashless, and we've talked about cashless for some time, but you specifically talked about central bank digital currencies and the push to not use cash more recently because of COVID. Even before that got announced, you called those things before they happened. So just wanted to thank you for your perspective on that, both in the past and currently. There's a viewer, Edward Carrasca, who's he's got a little bit of a rant here, but talking about they doubled the debt and gold and silver have been nailed down. Could you talk to us about how sustainable that is? We've got a couple of viewers with questions around that, just saying, it says there was a time back when silver was much higher that you thought it wouldn't drop below 26, but how can we make those kind of predictions when there's this so-called unlimited fiat tether that they can use to move the price?
It's very difficult, and just this will sound defensive. On the 26th, you can look at a chart. It held 3 times. On the 4th time for my paid membership, I did tell everybody just slightly ahead of time it's going to break through and go down, and it had. And from that point till very recently, until really this last year, 2020, silver's been underperforming for quite some time. It outperformed this year, and I think it'll continue for the next few. But it's very difficult. I mean, it's all supply and demand. The problem is the supply can be a paper supply, and that's the way the price is determined. So if you could create infinite paper, you could create an infinite supply. And that's really not the truth, but it's the way the market is realized at this point in time. I think that if we see a resurgence of silver for investment demand, not discounting the industrial demand we just spoke about, that's equal to what we saw in 2020, where over 50% of the silver supply mined was used for investment purposes only. If we see that again in this year, we'll probably see some rather substantial price increases. And most of that are very strong hands. These are mostly ETPs with, let's say, professional money management that probably want exposure outside of the mainstream banking system because they see what's happening. I mean, even Warren Buffett is dumping his banking stocks. Anyone with any financial acumen, anyone that has any real knowledge or even some insight or intuition about what's going on, even at a cursory level, understands that the banks are in vastly overextended positions where we're borderline in a fiat frenzy of phantasmal made up word proportions, meaning that we're on the edge of the cliff. We are in a situation where we need to have a new monetary system. It's just who's going to be in charge of it. Are the monopolistic bankers that are always in charge and try to control every aspect of our lives that wish to control it even deeper and further going to maintain control? Or is the revolt going to be in some non-distributed currencies between not only precious metals but in the crypto space? Or there'll be local communities that break down and just do labor per hour and trade that with each other. And I think all of those are going to emerge. I think when the dust settles, that there will be a huge push to mandate a central bank digital currency in a given nation state or maybe on a global basis. But there will be some resistance to that. And those people that resist it and just move outside the system that are willing to work hard enough to sustain themselves, that will be a feature of the new paradigm, I'm almost certain.
You mentioned some volatility or extension of risk in the banking system. A related question is about people who are looking for safe havens from the banking system. Some people have sought that in ETFs that promise the possession of gold within their own fund, for example, GLD, even though the ordinary investor doesn't get their hands on it. Michael Murphy says, GLD, 6 CFOs in 6 years. Last one quit the day before the 10K filing. What are your thoughts?
I'm not a big proponent of the SLV or the GLD, even Sprott PSLV, which I'm more favorable to. I mean, basically, you need the basics. I mean, keep it simple and sincere. That means to get real silver, real gold that you can touch. That's step one. If you want to use it, now I want to be a hypocrite. I do use the SLV and the GLD for hedging purposes, but I don't consider them to be real investments. I consider them to be paper investments. But I'm free market. If you think the GLD is your best access to gold, then I'm not going to tell you no, but there are better. But there are people that don't have access to taking physical possession because of their age, where they live. Maybe they're unsure of their, apartment. Maybe they live in a bad neighborhood. I mean, there are reasons that you would have to, think the idea that, wait, I don't want, gold on my person or in my car or in my house for various reasons. So I understand that. If that's the case, there are better alternatives than the GLD and the SLV.
So another related question here on what options are available to folks. Randy Heichel says, the stock market is in a big bubble. Bonds are dead. Where would we put your retirement funds when you already have 25% in physical metals and you need to be diversified. And again, we got to always say, we're not financial planners here. This is not personalized advice. This is talking about perspectives on options people should think about when they're asking those kind of questions.
Sure. Well, you want to look for asymmetric trades, and that would be in the crypto space. I mean, these things are crazy kooky. You wouldn't want to overinvest. You could get, just as well as you could rise, 300% in a month, you can drop 300% in 2 months. I mean, these things move up and down. Energy is important. I think anything in the energy space is something to look at. Steve St. Angelo was interviewed by you recently, and a lot of what Steve says is just spot on. I mean, basically, like he said, that the gold and silver are treated as commodities. When you have a commodity like wheat or soybeans, basically what you're doing in the futures market is hedging what it costs to produce that commodity. But gold and silver shouldn't sell at what it costs to get it out of the ground and refine it. It should sell for what the money supply is. And if the money supply is basically infinite, because in the Keynesian system it goes to infinity, then the price of silver is infinite. Now, I'm just doing that to get you to think. But the point being is they shouldn't trade at cost of production. That's commodity. Steve makes that point, so I'll reiterate it. The other part is, what does it mean longer term? And the idea is you want to have cash. And the best cash you can have is physical gold and silver. So that's where your 25% comes in. The other place would be what's proven to be the best over history besides the metals, and that's land. The Europeans have a saying that never sell the mud, which means if you have generational wealth, you might own that block in Paris, for example, and it may be an apartment building for 100 years, then it becomes a discotheque for 25 years, then it's torn down and becomes a grocery store, whatever, meaning that the real part of the real estate, the building on the land, can come and go. It can move through time. But the land itself, you never sell, just like gold. I mean, gold you can sell. Obviously, you have a core position and you could have greater. If you're 25%, you have probably at least a good core position. But so there's land or real estate. Income producing real estate's good at times, and it's not so good at other times, depending on what the real estate market does. Top quality companies are always good if you know what you're doing. So I'm not anti-stocks, but they're overvalued as at large right now. But if you're willing to do the work of a true value investor, really do some detective work, there are companies out there, startup ideas. And foreign currencies I really don't go into because they're really just a big lie. They all, it's basically a race to the bottom. There is no superior fiat currency to another fiat currency. You might be told constantly that there is, but there really is not. So I would say that's it. I look at food and I look at what's needed. I mean, the fortunes that were made in the Great Depression were people that didn't panic, took 2 or 3 really deep breaths, sat down in a calm manner, and thought it through. What is needed right now in our current condition? And if you could fulfill a need in our current condition, then you will probably do quite well as a business person. The other part, of course, is the sin tax, or I should say tax, the vices. Alcohol, tobacco, coffee, any addictive product, anything that makes you feel differently than you feel now. Drugs, obviously. I'm not advocating it. I'm answering the question. Those are the type of things that do well during trying times. So that, I think, covers it. Real estate, energy, vices, and look for opportunities in companies.
You mentioned just a few minutes ago about the concerns that some people would have for storing precious metals in their own dwelling or on their person. William Mueller asks, will any private vault based in the U.S. be safe under pending Marxist-like rule, or similarly, even publicly traded funds like Sprott Precious Metals and so on, or held at the Canadian Royal Bank under Trudeau? So the political climate affecting the security of property ownership.
Yeah, it's a great question. I can't say 100%. So the truth is I don't know, but I'll break it down further. The last best place would be a government-sponsored vault. So in my opinion, the Royal Bank of Canada wouldn't be the first place to store metal that I didn't want to hold personally. I would look for something that's totally outside the banking system, that's totally private. And I am aware of one, but I don't say it publicly because I want to keep it as anonymous as possible. That's where I store mine personally. Not all of it, but some of it. So I think that's it. Does that mean that under a complete Marxist regime that it would be in jeopardy? And the answer is I don't know. I think usually as these things come, governments are large, and there's a lot of largesse, and there's a lot of misallocation of capital, and there's a lot of infighting. So normally you, being an aware person, can make a pretty good guess on how things are starting to move. You can see the trend. And usually the trend gets to be more and more noticeable. You have to take that opportunity to make a change. So in other words, if the regime was going to confiscate, then you would probably know it from the first, let's say, bureaucrat that would come on to the telly and say something to the effect that no worries, all precious metals will never be confiscated. Once they make that statement, it's time to call up your dealer and move it.
Just like the name of every bill that passes Congress is the opposite of what it actually its results actually are. On that same theme, we have John Seco who says, I'm concerned about having cash in the bank. Would you invest in silver or gold, or should I wait for a market correction? So there's a bunch of different questions there, but what thought process do you think people should at least take stock of when they're thinking about the safety of cash in the bank, or the value that they think is stored in that cash?
Well, again, I can't give financial advice, so I'll tell you what I do. Basically, I've got to have cash to run the business. I try to keep it low. I think the best thing to do, what was his name, John?
John. Mm-hmm.
John, is to type into Bing or somebody 10 Rules of Silver Investing by David Morgan. Type in 10 Rules of Silver Investing or 10 Rules of Silver Investing by David Morgan. And that is an outline that I think will answer every one of your questions.
All right. And related question here from Ray Cave, who says, what is the safe and easy way to buy gold and silver?
Depends where you are. So without knowing where he's located, I can't really answer it. I mean, if you're in the United States, or if you're in North America and near a fairly decent sized city, it doesn't have to be a main one like Toronto or Chicago. There's a coin dealer in the phone book or on the internet that you can usually walk in and buy over the counter. So that's number one. If you are in a jurisdiction like Europe or Japan, you are in a situation that's much, much more difficult to do that. So in those cases, usually an online dealer is your best idea.
We had some concern earlier in the year from some data breaches. You mentioned cybersecurity as one of your big things that you're concerned about going forward. So that's a trade-off with the specific nature of different dealers doing business. The online ones aren't the only option. I know Miles Franklin also does offline business old school, so that you're not exposed, your privacy isn't exposed. You've talked about the gold-silver ratio with us several times in the past. This is a straight-out question. J.D. Smith says, at what gold-to-silver ratio would you switch your silver into gold? Can you first hit, for those people who haven't been following it, what's the discussion all about? Secondly, answer the question, what ratio?
Well, it's a long discussion. The gold-silver ratio is simply how many ounces of silver does it take to buy an ounce of gold. So in March 2020, it took roughly 125 ounces of silver to buy 1 ounce of gold. Today, it takes around 72 ounces of silver. So in that time frame of about 9 months, silver has outperformed gold rather significantly. No one knows the future, including yours truly, but what we do know is through all of recorded history that if we look at 3,500 years of the gold-silver ratio, and every foot on that, let's say we're going left to right on a great big street, and every foot is 100 years, you would have 3,500 feet for 3,500 years, and it'd only be in the last foot and a half where the gold-silver ratio would be above 16. Think about that. How many hundreds or thousands of years the gold silver ratio is at 16 or less. I've seen other studies that showed 20, so you can use 20 if you want, but I think it's the idea. So that was basically either the monetary or the natural ratio when both silver and gold were money. But in the crime of 1873, when silver's only purpose was money, it was demonetized, and that's what the Wizard of Oz is all about. So in modern times, silver's become too valuable to be money, quoting Johnson, when basically we took silver out of circulation in 1965. So the ratio's gone crazy from during those times. And during the Depression, too. I'm sorry, I misspoke. I want to be clear. During the Depression, it went up over 100 to 1 also. So, but it was also demonetized in 1873. So since that time, I think I'm being correct here. I didn't want to misstate anything. So when silver's been non-money, it's been all over the map. But silver doesn't care if it's invested by investment purposes for monetary demand or safe haven status or whatever you want to name it, or industrial use. It doesn't ask, am I being bought for one or the other? It doesn't care. It's just demand. And one demand that is really unpredictable until times like these is investment demand. So I think 30 to 1. The last time in this bull market, we got to 33 to 1. That was a spike. And I think we're going to see that as a minimum. So going from 70, it's called 75. If you go from 75 to 35 or 70 to 35, that's silver outperforming gold one more time. So for every dollar you invested in silver, quote unquote dollar, for every unit of currency called one that you invested in silver, it would produce twice as many currency units as gold would, if and only if I'm correct about the ratio dropping from 70 to 35. I think that's a minimum. I think that we could get back to that historic 16 to 1, which again is that 35 going in half again, which means silver would outperform gold at a 4 to 1 basis. And is it possible to shoot beyond that? And the answer is yes, it's possible. Is it probable? I don't know. What I do know is how tiny the silver market is. That's the key. It's how many people can be awakened and understand the dynamics of markets in general, and then drill down into the dynamics of precious metals, and then drill down further into understanding why silver is the most essential metal known to mankind. The only thing that's more valuable than silver as far as humanity is concerned is oil. Without oil, we don't move, we don't eat, we don't sleep, we don't communicate, we don't transport. But without silver, we're almost in the same boat. Not quite. Oil's more important than silver, but it's the second most important commodity there is. If people really understood what value means and how valuable silver is to protect you from, let's say, as a biocide or water purification, or let's say impregnated into shrink wraps to preserve your meat packing plants, or used in solar generation, or clipped together to make colloidal silver, or used as a battery charger, or all these other hundreds and hundreds of uses that are taken for granted by everyday people, you would actually determine that silver is probably one of the best long-term bets you can make as far as what is a legacy investment that you could pass on to your children's children's children and be fairly guaranteed that they'll be happy campers at the end of those generations.
We wanted to give you a chance to, if you could, please let people know how they can find you online and get subscribed for the Morgan Report if they want to.
Yeah, the best thing is go to the landing page at themorganreport.com, sign up for the free newsletter, and then immediately go to the blog post and click on the blog. I suggest you get there 2 or 3 times a week. Lots of free information. I'm also putting written format. Again, I've been doing it for a year now. I plan to continue. So those that are really brief on time and don't want to listen to a full interview like this can take, usually it's a 3 or 4 minute read and get the essence of what we talked about in 4 minutes just by reading the blog. So there's that. I appreciate everyone. I appreciate your time. And remember, no matter how much money you got, receive, make, have, hoard, save, it pales in comparison to the number one most important thing any of us have, and that's our freedom. And that's being challenged at every angle and every way by the power elite. So all the money in the world won't save you if you lose your freedom. And I like to go out saying that.
Yeah, you've spoken with us several times from an awakening philosophical viewpoint like that about the importance of those guys. Please look in the description of this video. We'll put the links to the last couple of interviews we did with David, which he expounds on those. And also, if you go to libertyandfinance.com, sign up for our free newsletter by going to libertyandfinance.com, and over in the left-hand margin, put your name and email address. That's all you need. You'll get a confirmation email. You confirm that you're in. Free newsletter 3 times a week, Monday, Wednesday, Friday, and it has links to all of our guests and all of the descriptions and all of the links that they provide to more resources. And David, we just thank you for joining us this first time in the year 2021 on Liberty and Finance.
My pleasure, Dunnigan. Thank you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.